It's Russ here from the Morse Mortgage team. I hope you're having a lovely summer. And I'm just going to give you a quick update here on the Bank of Canada's decision yesterday. Many of you know, is the Bank of Canada held their rates steady, which is the overnight rate being 2.75%, and which equates to our bank lending rate or bank prime lending rate being 4.95%. So let's have a look at what happened yesterday. And why is the Bank of Canada sitting in a holding pattern? What's keeping them from decreasing rates? Because we are anticipating rates to fall another quarter to half and even 3/4 by mid next year. So they held the rate steady. And at this point, there's no urgent case to cut. The economy is not doing terrible, but it's not doing great. So they're not at the point where there's no urgency at this point to cut just to keep stimulate the economy. Now, I can't say that for the real estate market. And just to veer off a little bit, is I've had a lot of clients ask me, okay, when is the market going to pick up? And I think as we see more cuts, and I chat with some clients today, is they're selling and they're in no rush, but it'd be nice to see some opportunity in that, because it's been quite a few years now where that industry, the real estate industry, has seen a lot of it's just not operating like it typically has now, not to the levels that it was at one point. That may be unhealthy, but see more activity that's out there. Now, inflation really is the key obstacle of why the Bank of Canada is not dropping rates further. And the Bank of Canada wants to keep that range, inflation, between 1% and 3%. We'll talk about this more in just a minute. The labor market is still resilient. It's not booming. But market pricing it's a hold, but uncertainty later. Now, this is a forecast that's very interesting, is over the up until the end of next year, there's a lot of predictions here. RBC is sitting at, okay, well, the prime rate's not going to move. You've got Scotiabank saying we'll see a 1/4 point drop. We have other lenders that are saying we'll see a 1/2 point. And even BMO is saying we're going to see 0.75% drop, 0.75%, by the end of 2026. So what is going to determine this? Of course, all these things here that we just have a quick look at will determine a lot of the path of that prime rate. So here's the forecast for the bank priming lending rate. At one point, this is up to 7.2. Don't really want to talk about that, but those were some tough times for a lot of us that had variables. We've seen a drop down to the 4.95, which is where it is, of course, today. And we're anticipating, and the forecast is maybe we see a drop in December, potentially September, but they're calling for a cut maybe in December by end of year, and then maybe another cut in Q1 or so of 2026. That could happen sooner, it could happen later, depending on what happens as time goes on. Now, as fixed rates, the trend is over time, these are trends, and is that we would see those drop down a little bit more, not significantly. Like if we're sitting at, bond yields of 3.08, maybe those rates drop about 20 basis points or not, but this can change on the fly as well. The inflation rate. Now, this is what they're concerned about, is the future of inflation. And we've seen a bit of a jump potentially in inflation, but that could be just because all the people sweating about the tariffs and trying to get all the buys or all the purchases in before all the tariffs went in. So inflation is popping up a little bit, but it's still within level. Okay, but they're just watching that closely. Canada's economy has shrunk over the past couple of months, April and May, not by significant numbers, but it has negative growth at this point. Canada unemployment is expected to peak out here in September and then start to still 6.9% and 6.7% is above what we anticipate or above what we want. So there's a lot going on. Do we anticipate further rate cuts? Yes, we do. But when and how much, we just don't know at this point. We'll continue to watch this for you. So that is a quick update for you. If you have any questions, as always, please reach out. A lot of my clients are asking, should I take a fixed or variable? That depends on what your plans are, but that's something that we at the Morse Mortgage team, what we'll do is continue to watch that for you and monitor for it, and we'll go through a needs analysis with you to talk more about the risks and the pros and cons of fixed and variable. Never hesitate to reach out. Please enjoy the rest of your summer of August. The weather is beautiful, and like I mentioned, never hesitate to reach out. Thanks. Keep well.